All right, so today I wanted to make a video basically to do two things. Number one, go over what I think is something that anyone, well, not anyone can do, but you can do with your portfolio to easily increase your returns with very little extra risk, arguably zero risk, but I wouldn't go that far. And the other thing too is to update the mock portfolio. This is something I haven't talked about in a while, so I wanted to talk a little bit about that. So the first thing I'll get into here is what am I talking about? And what am I talking about when it comes to a way to easily increase the returns on your investments? And I'm sure a lot of people have heard of them, but the ones that haven't, this is simply options, namely covered calls. You can also do cash secured puts. There's many other variations thereof, but the main ones are covered calls and cash secured puts. Or if you have the ability, naked puts, I would never recommend that, but that technically is an option. So covered calls basically is you own 100 shares of a stock or an ETF, and you say, okay, the shares are at $100 per share. I'm going to sell let's say a 110 strike call, and I'll collect premium. If it's below the strike at the day of expiration, you get to keep the money. If it's above, you sell the shares at whatever price you agree to. Now the key with covered calls is if you're okay with losing the shares, okay, by all means, let it expire. You'll get your $110 a share, and that will be that. Most of the time, though, you don't want to do that. So what you want to do is, if your broker gives you the option to simply roll it into a new strike, do that. Some of them don't, so you're going to have to do it. You're going to have to buy it back and then resell another option down the road. That's probably the easiest way for someone to understand it. And the reason that this increases your returns is you get to keep the cash if it expires below the strike price. Now, the key with this is you want to make sure you sell a ways above. Now, again, I'll give an example of this. Let's just use the NASDAQ ETF because it's easy to understand. So, again, currently at $460, just under $463 a share. Now, it also becomes a very strategic thing in that a lot of stocks and ETFs, they will only have monthly options, being the third Friday of every month is option expiry. For all the stocks and ETFs that expire monthly, it's going to be that third Friday. Now again, the ones that are traded a lot more heavily will have weekly, sometimes even daily options. When you look at the NASDAQ ETF, they have daily options. Like your Meg 7 ones will have daily options. Some of the moderately big ones, they'll have weekly options. The smaller ones will have monthlies. If it only has monthly, you really don't have an option. You're selling monthly. That's your only option. If you have the option of daily, if you have the option of weekly, it becomes very strategic in how far out do you want to go. You also have to keep in mind that in tax sheltered accounts, you may get in trouble for selling daily or weekly options. You're probably going to have to go a little bit further out, but again, it's going to be a little different in every different area, so you're going to have to look into the rules on that. And again, a lot of that stuff, there's a lot of gray area, so good luck with that in some of these places. So basically, if you want to give an example, for me, I would want probably, if you can do weekly, I probably would do weekly if you have the option for that. So let's just use an example. So again, the next weekly option expiry would be this Friday, August 2nd would be the Friday. So a lot of times, again, we are not actively being traded right now, so these prices they're just going to be the last closing price. So a lot of people see, oh, you can make $7 a share for selling the 464. I'm going to want to do that. That's because that's literally $700, right? And a lot of people hear that and they say, oh, I'm going to do 700. I'm going to make all this money. You don't want to do that. And you don't want to do that because if the shares are above, you're going to have to buy it back, or you're just going to have to lose the shares and lose the returns. So the key is you want to sell a ways out. Now again, this is where your betas, your thetas, the Greeks per se come into play. My strategy here is I'm going to sell options where it's typically going to be like an 80 to 90% chance they expire worthless. So you're going to have to sell probably 3-4% above where it's currently at. So you're probably looking like 490, 480, 490. So if we go down here, let's just say 485, just for, I don't know if it's going to load, but the premium's going to be significant. Yes, it did load. So the premium's going to be significant. Actually, sorry. Those are, I was wrong here. I was looking at puts. So if we look at calls, the 463 call is, again, $6.90. The 485 call is going to be, the last one was 52 cents a share. So that's, $5 and no, sorry, that's $52, right? So $52 to sell that one at roughly, 2 or 3% out of there. And if you look at here, we do not have, yes, we do. So again, the probability of this closing in profit is 9.8%. Otherwise, or if you want to reverse it, you would say there's a 90.2% chance that this expires worthless. So it's overwhelmingly likely that this will expire worthless. So you really want to use these to your advantage, because this is the key to making money here, is that you want to sell out of the money enough that it's very unlikely that these end up in the money, because if it's in the money, meaning it's over 485, then you're going to have to buy it back, or you're going to lose money, which you'll lose money buying it back, but that's why you roll it far enough to where you can offset that. So this is the key. And the only real problem with this strategy is you need 100 shares. And a lot of people, me included, the vast majority of the positions I hold in my personal portfolio, I don't have 100 shares of. In fact, I can count on one hand the amount of companies that I have 100 shares of. So this will take time, which is one of the reasons why I have this mock portfolio, because it gives you a chance to practice for when you have more to work with. Obviously, I don't have $1.1 million in my personal portfolio, right? So that's very important. So getting into the mock portfolio section here, my strategy has been for basically 4 or 5 months, whenever I think I opened it in like February or March. Again, the vast majority of it was in bonds, SPHY, USHY, and BILL, which is the T-bill ETF. I've lowered those positions probably like 20% roughly, and my plan, probably I'll have this all sold off for sure by the end of the year, but we'll see how things react when rates over, again, I think there's a 94% chance we get a rate cut in, just off the top of my head, I think that's what the number is, in September. So if these continue to go up, I mean, obviously the T-bill ETF it's not going to go up, but these ones are more rate sensitive than your short-term treasuries or T-bills. So I'm going to keep selling these off. I'm probably going to sell off 10% per week until it's all gone, and I might up that a little bit as things get closer. But again, if I look at my cost position on here, I'm up $2,700 and $2,400 respectively. That's not why I bought them. I bought them because I thought, hey, rates are going to go down eventually. These will go up a little bit. If that happens, you'll get whatever, 4 or 5% return, maybe 10 if you're lucky. And in the meantime, you'll get your 6 or 7% dividend yield while you wait. That was my strategy there, and it's worked out quite well so far, and I don't think it's going to go awry, because it's becoming more likely by the day that we get a rate cut. So other positions, again, MSCI, that's one I bought about a month ago. Average position there, 491, currently at 540, so I'm up nicely on that. Alimentation Couche-Tard, I'm up to 600 shares. I believe I was at 400 or 500 the last time I made a video. EQB, I'm up to 500. Those are pretty much full positions. I might buy a tiny bit more, but I don't think I would go over about 5% of the portfolio in any one position. So those ones are very close to full positions there. Again, those are great long-term holds. I really like them. ODFL, average position 201. It's at 202. I really like this company. Again, that's close to a full position there as well. I probably would maybe buy another 100 shares, but we'll see. Again, I really like this company, though. Accenture, another company I like quite a bit. Average position is 322, currently 328. I'm not sure if I'll buy any more of that. If it gets really cheap, I probably will. Paycom Software, honestly, I plan on selling this just because I think the future outlook is a little not scary, but not as good as what it was when I bought this probably 6 months ago. So again, another thing here too is that if you want to exit a position, use options. Because what you can do is, again, if we look at Paycom here, it's currently at 164. My average position is 176. So let's say I want to make money on this position. So what I'm going to do is, and I already have done this, so I don't even need to do it again. But you're probably going to have to go out. Let's go to this. And again, this one has monthly expirations, like I brought up earlier. Again, only one per month, and going out super far. Some of them don't even have a month. So let's just say I want to sell in September, which is September 20th is that third month. So if I sell a 180 call, I can collect $5.82 per share, which is, again, $582. The good thing is that, hey, you get that $582. The bad thing is that if it runs up to 200 in the meantime, you're only going to get $180. So you do have to be a little bit careful there. But again, when I'm exiting positions, typically I'm going to use options. When I'm entering positions, usually I'm going to use options as well. So, and that's one thing too, that options are used a lot more by professionals than average investors. Now, part of that is that a lot of times you're limited in what you can do in tax sheltered accounts. But still, whenever you can use options, you want to when you can. But you do want to learn the basics of options. I'm not saying hop into them with no knowledge whatsoever. QLYS, I really like this company. I probably will buy a little bit more. Manhattan Associates, same thing. Skyworks, another example. Watts Water, another example of that. EVVTY. This company trades over the counter, so you can't use options. Microchip Technology, this is pretty much just a buy and hold. This is the uranium ETF. I'm slowly buying this one. I will continue to increase this whenever we get dips. ALLE, again, I do want more of this company. I really like that company. It's basically at a 52-week high, but I don't think it's crazy expensive where it's at right now. Dollarama, again, I bought 100 shares at $101. It's at $131 right now. I wish I would have bought more. But again, you live and you learn. Vici Properties, again, I'm up quite nicely on this one, but I only bought 300 shares, so I wish I would have bought more. BAM, again, another example, again, 200 shares, 39.5. It's currently at 42, so again, I wish I would have bought more there. And again, speaking of all those options, this is all these puts and calls that I have. I have quite literally over 100 of them active right now. So that is what I wanted to get into today. Basically, to sum things up, again, if you have the ability to do this is an easy way, a very, very easy way to increase your returns. The key is to not be greedy, though. The key is to not be greedy. You want to sell fairly deep in the money, out of the money. Again, don't get caught up on those juicy premiums. You want to sell further down. You want to make sure that you have at least an 80% chance of making money. Because if it's less, then you're going to have to deal with the headache of having to buy things back and risk losing money. Because that is the one time where you can lose money. So you want to be very careful for that. So anyway, that is the video. That is what I wanted to talk about today. If you have any questions, concerns, comments, all that stuff, feel free to let me know. I will definitely respond. And hit that like and subscribe and stay tuned for more.